And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the market forecast for Monday, August 8th, 2022. I hope you all had a wonderful weekend. I am JD. I'll be your host for today. Our good friend and mentor, Mr. Hoagland, is out today. He's taking some personal time off this week to help out with a family-related matter. So let's keep the Hoagland family in our thoughts today. As always, thank you for choosing to spend your time with us this morning. Hopefully we can all walk away from this with a little more knowledge and understanding than we had before we started. Let's start with a little housekeeping. Since Hoag is out today, we will not be hosting a group coaching session later today. I'll repeat that group coaching has been canceled for today. We'll take the rest of the schedule day by day until we know when John will be back with us. With that, let's see what's happening this week. So the economic calendar is looking pretty light this week. It will be highlighted with CPI and the EIA Petroleum Status Report on Wednesday and jobless claims and PPI on Thursday. Looking at the calendar just a few minutes ago, I only see one Fed speaker scheduled this week. That would be Minneapolis Fed President Charles Evans at 11 a.m. Central Time on Wednesday. I'm pretty sure there will be a few more this week, but I think I'll need to take a look at a different calendar to confirm that. Notable earnings out this week will come from Tyson Foods, Take-Two Interactive, Disney, and Rivian. For today, we have the Investor Momentum Index due out at 11:30 Central Time, and that's it for today. You know, I'm not even really familiar with the Investor Movement Index is. Let me take a look real quick. I'm on the Econoday website. The definition of the Investor Movement Index, or IMX, is a proprietary behavior-based index created by TD Ameritrade, designed to provide insight into Main Street sentiment. The importance: the IMX can provide insight into whether investors are growing more bullish or bearish on equities. All right, that makes sense. With that, let's take a look in the room, see who's all here this morning. Scott Saw first, good morning. Shaw, James, Theodora, Tachyon, Patrick, Brian, Snowflake, Orion, Dan Trader, good morning. Federico, Jorge, Dark Kevin, Marcelo, Terry, ZK, chilling with Dylan, DA, Brody, Glitter Sandwich, Serenity, Denise, Anthony, Ron, Jordy, Bill Phillips, good morning. George, Sarah Hall, Jan, Jerry's awake. Jules, Jimmy Decker, Rusty Golfer. Trading Research, good morning. What about Make Hoag Money today? Make Hoag Money is scheduled for Tuesdays and Thursdays after the market forecast. So we'll have to, like I said, we'll take it day by day until we know when Hoag's coming back. I'll let you know. I'll be here with you on the market recap later on today, so I'll let you know if I hear any more news about that. So with that, we'll make this short and sweet for you this morning. Let me queue up some charts and we'll dive in real quick. Here we go. Oh, first, couple key points. In Asia, stocks closed mostly higher overnight. Shanghai Composite was up 0.31%, Nikkei up 0.26%. The Hang Seng Index was down 0.77%. Stocks in Europe are trading mostly higher this morning. The FTSE's up 0.54%, DAX is up 0.85%, and the CAC is up 1.13%. rounding out that trifecta, the Dow, S&P, and Nasdaq are all poised to start the trading week higher this morning. VIX is currently sitting at 21.49, and the yield on the 10-year note is presently resting at 2.8%. Let's dive into the E-mini S&P 500. So here is a daily chart of the September contract. You can see we're in a bit of a consolidation period right now. ES was held to just a less than 100 handle range over the last 6 trading sessions, and volume was on a bit of a decline until Friday's jobs report came out. During Friday's session, the ES traded roughly 1.7 million contracts here and picked up about 16,500 in open interest. There's clearly some jockeying for position going on right now. Our inflection point or line in the sand is for the week will be this weekly kickoff high right here at 41.75. This has been a pretty significant area going all the way back to March, where it held as a base here. With the number of stops that are likely built up above, I think we'll find acceptance fairly quickly above this level if we can breach it early this week. If you look at this on a weekly chart, it kind of looks like it could possibly a textbook double top chart pattern, which would put a measured move target somewhere around the 3100 area down here. But that's looking a little unlikely to me right now. Momentum is still pretty strong in this market. Here's a look at the 4-hour. We're kissing that weekly kickoff high right now. You can see the price consolidation a little more clearly here too on the 4-hour chart. Tight trading ranges going back to the beginning of the month. Prices just keep tiptoeing along this 20-period moving average here, slowly edging higher and slightly decreasing volume, sort of. Looking at this chart, the market appears to be, it almost looks to be a little exhausted at the moment. But we are seeing some strength early this morning. Let me backtrack just a second in case people have never seen me sit in on the market forecast. I keep my charts pretty simple. I'll just give you a quick run through. So this red line here, that's our 50-day moving average, 50-period moving average, I should say. The blue is a 20-period moving average. The green is a 10-period moving average. Down here are just some volume bars, and below that is a slow stochastic oscillator. I only keep the oscillator on the daily charts. And as far as the moving averages go, the 10-period and 20-period exponential moving averages, and the 50-period would be a simple moving average. Back over here, let's take a look at the 30-minute. So this first profile is from Friday's trading session. This big drop here obviously was 7:30 candle. That's when the jobs report was released. You can see the market recovered nicely from that initial knee-jerk reaction. Spent most of the day trading inside of Wednesday's value area over here. Overnight inventory is long, and we're going to open regular trading hours with a bit of an upside gap this morning. I'd like to see some follow-through after the bell, but like I said, we are right around this inflection point right now at weekly kickoff high. So I think we are going to see some business being done at this level. An early test of this is likely to, an early test of weekly kickoff high is likely to happen. We're doing it right now, and we'll just have to wait and see if we make a stop run or if we just kind of consolidate there for a little bit. Overall, I think this market looks to be somewhat in consolidation right now. It's moving sideways, and it will continue moving sideways until it stops moving sideways, right? This slow stochastic oscillator down here at the bottom is signaling a potential overbought situation. Maybe a bit of exhaustion, but like I said, we're looking pretty strong this morning. I'll be looking for some longer term stops up here. Maybe above these highs from May, early May. If a test of that is met with rejection when those stops get hit, I'd like to see a couple closes above weekly kickoff high before I'm really accepting acceptance of higher prices, I should say. All right. Let's take a quick look at crude oil. So, crude oil looks to be finding some acceptance at lower prices right now. This is a daily chart of the September contract. The September contract lost about 25,000 in open interest during Friday's session right here on that small close higher. There was a little bounce after taking out this low from July late last week, but we're still well below these shorter term moving averages, which I do consider a sign of weakness. There are plenty of outside factors affecting this market right now, so this could turn into a pretty volatile week for crude oil. Taking a look at the 4-hour. 4-hour chart shows a bit of consolidation going back to last Thursday. And look at this volume pattern. This pattern of decreasing volume and open interest on the way down would typically be telling me that sellers are drying up right now. You can see how this 20-period moving average has sort of held as a base for rejection the last few weeks. So if we do test last week's low early on this week and we see some rejection of lower prices, I'd want to see it close above this 20-period moving average before considering putting a long position on. That's just me, though. Let's see what the 30-minute has to say. So we did see quite a bit of buying early on in Friday's session. Based on the volume pattern here, looks like it potentially could have been some short covering that would account for that drop in open interest also. Spent the bulk of the session trading above Thursday's point of control, but continued modestly lower going into the close. Right now we have some trapped longs overnight, it looks like, and we could be on the hunt for some weak stops below Friday's low. Overall, this market still appears to be weak to me, but we're getting some mixed signals right now. Momentum is to the downside. We're trading right on the February lows right now. You can see these February lows way back here. We're pretty much right on top of those right now. Open interest took a hit, but I think it's going to take quite a bit of buying power to hold this one up for sure. Let's move on to the Nasdaq. So Nasdaq also trading a bit higher this morning after closing down about 100 points on Friday. This dip on Friday saw the September contract lose about 4,000 in open interest on roughly 700,000 contracts traded. Right now we're hovering right above the VWAP here. So compared to the S&P, we're not seeing quite as much consolidation over the last week and a half. The ES has been moving relatively sideways for the last 6 or 7 sessions, while the Nasdaq continues to edge higher, and volume doesn't appear to be drying up at all. Our weekly kickoff high here at 13,428 is going to be our line in the sand this week. Acceptance above and rejection below. Over 2-hour, 4-hour chart. Yeah, I like this 4-hour chart. You could see buyers using this 20-period moving average as a basis support going all the way back to July. In fact, there hasn't been a close below the 20-period moving average since, what is this, July 27th. We're getting a little bit of sideways price action right now, but this chart looks like a textbook uptrend to me. Going back to this low here from July 14th. That looks like a strong rally to me. Here's our 30-minute. Looking at the profiles, the Nasdaq doesn't look quite as strong this morning as the ES does, but it's still up, close to 1% off of Friday's close. Overnight inventory is long after spending the majority of the overnight session trading below, or after spending the majority of Friday trading below Thursday's value area. But it doesn't look like we'll be opening with much of an upside gap, not as much as the ES, that is. But we are trading above Friday's value area high and above the shorter term moving averages too. Potential for follow through looks pretty strong. Not as obvious as the ES. But overall, this market looks and feels strong to me right now. Momentum is pointing higher. These moving averages are signaling strength. And volume has been pretty consistent. With all the talk around recession and a possible second leg lower for the stock market, I got to say the Nasdaq still feels pretty strong to me. With that, let's take a quick look at gold. So gold has been on a nice little rip the last few weeks. This started out with what I thought was a potential bear flag at first, but here we are testing the 50-day moving average right now, right here, this red line. There was a bit of a drop on Friday. This move lower cost the December contract about $7,000 in open interest, but this 10-day moving average has crossed above the 20-day moving average, so this rally still has some legs right now. Over to our 4-hour chart. This is a strong move higher since making the low back on July 21st. Yes, July 21st. Our call is for higher prices in our weekly kickoff email. So this weekly kickoff low at 1775 could turn into a significant level early on this week. We might see some business taking place if we go to test last Thursday's lows. Pardon me. But it looks like a test of Friday's low could also come with a test of the weekly kickoff low. But we're seeing some strength this morning, so we'll wait and see what happens there. Over to our 30-minute. The spike lower again came on the heels of the jobs report. Slight recovery, followed by some consolidation going into the close. We spent the bulk of the overnight session trading inside value, but now we're seeing some buyers stepping in, and we have a small upside gap to start the day. Overall, there is strength in gold right now. Momentum is pointing higher. What I thought was this bear flag has extended into a nice move higher, and we're testing the 50-day moving average right now. I think this is a bears beware type of scenario. We might see a little resistance off that 50-day moving average, but a couple closes above, and we are in a bull market. Well, not a bull market. The rally will continue in my eyes. Let me check the chat here real quick for some questions. ZK wants to do make Hogue money. If I could get access to the live account, I'll look into it. I don't know how feasible it is. I'll talk to our tech guys, see if we can get everything set up and transferred over. I'm not going to guarantee you anything, obviously, and there's a good chance Hogue will be back tomorrow, but we're just going to play it day by day. I'll give an update on that later on in the recap today. Nasdaq just adjusted down 50 points. Let's take a look at there's our 30-minute chart. This black line here is the VWAP, if I didn't mention that earlier. That was a nice move right back down right at 8 o'clock. I don't see any news coming across the tape. Possibly just an overnight correction. We might open the day back inside value. That could be set up a whole different scenario for the day. But let me switch back over here real quick. Sarah Hall, have a great trading day. Thank you, Sarah. You have a great day also. Yeah, it's more than likely I will be back here filling in for the market recap later on this afternoon. So everybody have a great trading day. Take your deep breath. Keep the Hogan family in your thoughts today, and I will catch up with all of you this afternoon, hopefully with another update. All right, everyone. Have a great day, and I will see you all later.